of the ET Now Leadership Dialogues. Vinny Motiwala, my colleague, caught up with Tata Consumer MD and CEO Sunil D'Souza, who's of the view that consumption demand will only continue to rise as per India's per capita income grows. He sees a secular trend across segments and talks about premiumization and how it's going to only gain further traction.
As per capita GDP grows, disposable income starts growing. Now, thumb rule is roughly half of disposable goes into consuming more, half of it goes into buying new products and services. Now, when that buying new products and services start, mostly people don't immediately start consuming better things. They start buying newer things. So you'll find first the wave of discretionary stuff starting to move up, right? Two-wheelers, financial services, electronics, all this kind of stuff. The second thing which happens is services start to move up, whether it is health, education, personal, fitness, all these kind of stuff. Consumers will start to upgrade what they're doing and move. I see a secular trend of health and wellness and convenience, right? Where consumers spending around not only health products, supplements, being conscious of nutrition, but also this whole convenience piece, online, outside ordering, and I'll come to e-commerce and the retail scope, right? You will find brands taking off, people moving from commodities to brands. India is still a long way to go, and across categories, if you look at it, Indian penetration is low. Whether you take, if you take durables, for example, right? Televisions is about 80 out of 100 households, but refrigerator is only 1/3. So there's 2/3 of the Indian population doesn't have refrigerators. If you take washing machines, it's between 13 and 15, right? 85% of the market is out there. If you take air conditioners, it's 5 to 7, right? So huge this thing in durables. You take four-wheelers. India's four-wheeler penetration is 24 per 1,000 households, right? Globally is 300, right? So that's a huge. Even in categories that we play in, right? In tea, 1/3 of tea is still unbranded. There's a huge runway out there. So brands will take off. People will spend on technology. People will use credit. And I come back to the e-commerce piece which I talked about, right? The retail landscape will change dramatically. Modern trade will take off because India is still underpenetrated. It's primarily driven by kiranas. Modern trade will take off. But e-commerce will also take off. Now, a lot of people will say e-commerce, will it go beyond this? To give you a perspective, I think globally, in India, just 5% of retail spend happens online. Brazil is 15, US is 25, China is 35, so long way to go. 60% of Indians who are online have never transacted on e-commerce online, whereas China, US, the number is only 20, right? There's a long runway out there, excepting there's a difference between what you saw in the past and what will happen in the future. You will not see the cash burn. I think that has become sensible. You will not see online-only companies because there is something called the California ceiling, right? It's only 50 million people who can afford this. So after that, companies have to go offline to grow. But you will see a huge number of very, very personalized businesses with D2C, artificial intelligence, ability to target.
I just want to, interject on that point, because a D2C market also, when you look at it, a lot of listed players, a lot of companies now are focusing on that. Do you think that is a major trend that one should be watching out for in any segment, that specifically on the consumption side? Is that something that could play off, whether you look at it in any sort of a market?
I go back to what I said earlier, like D2C, there will be certain segments for which D2C is important. Financial services and other services, etc. But from consumer goods perspective, I talked about the California ceiling, right? 50 million people. It's not a billion people that you're going to target. So products which appeal to the 50 million people will take off. But if companies really want to scale, D2C alone is not sufficient. You will have to be omni-channel. You will have to come down. You will have to be in the modern trade. You will have to be in the kirana stores to really build scale.
Absolutely. So, if you just talk about growth story for the company, right? For Tata Consumers also, it has been fabulous since the time you have joined. We've spoken about this of focus on becoming a wholly owned, like FMCG play that you want to focus on. As a trend, how have you seen the change more shifting towards premiumization? Is that something that is a major trend that we should keep an eye out on? And how do you see this shaping up for the company?
So I see two trends out here, right? A is the higher end of the consumer, there will be premiumization happening. The other thing is a sort of premiumization. The Indian consumer was largely a price-driven consumer. That's my generation and before. When India was always in a perpetual recession and you never wanted to spend because you didn't know what tomorrow will bring. But today's consumer who's coming of age is the consumer who's born in liberalization. Okay, they have seen an India which is confident, in India which is growing, a GDP which is accelerating, right? So these consumers are very, very confident of going out and spending. So it's not only premiumization, the consumer will move to value. I mean, there is a price value equation, consumers will. I was just reading the report yesterday. The May automobile sales, Maruti sold more Swifts than Wagonrs. They sold more Balenos than Brezzas, right? So it is not price. People are looking at price to value and moving up. But again, when you say premiumization, it depends on the brand and the story creation. It depends on the price value equation that you provide. It depends on the differentiation that the product provides.
Absolutely. And just one last question. Capex story for the company. When you have planned in terms of focusing more on Capex, you've given a number for FY25. How do you see that changing? And what is your main focus going to be going forward for the next 5 years?
Yeah, so we are a FMCG company. Our biggest spends are going to be growing businesses. Now, FMCG is not a large Capex heavy business. For FY25, yes, we have an extraordinary Capex of about 400 crores, which we are investing in expanding our capacity in the coffee plant in Vietnam. But other than that, it's broadly as a percentage of our total revenue is largely constant. So it's not going to be extraordinary. Yes, if we find a big opportunity, there's no reason we would not plonk it there. But largely FMCG companies are broadly very straight line Capex.
Absolutely. And any interesting, there are a lot of companies, I see small companies coming, and now the trend is everyone is reading the brand properly. Everyone is reading, what ingredients are there. Is that something of a concern that comes in? Smaller home brands are coming in now, I think. How do you see that going forward for an FMCG side business?
No, if you're talking about consumers being more aware of what they're consumers reading the labels on the products, consumers being more aware of what I call HFSS, right?
Yeah.
High salt and sugar. I think that this is, I alluded to it earlier, health and wellness is going to be a increasing trend. Consumers are going to get more aware. As the economy develops, regulations are going to get more stringent. That's actually good for companies like us because we always make sure that we're in the right place. We are probably one step still further than what the law says it is because we want to do the right thing.
Absolutely, that's great. So no worries, doctors keep saying shakkar kam karo, salt kam karo khane mein. That's not a worry for you because you are fine on that line.
No, I would just leave you with this thing. Ultimately, consumers have to make a choice and everything in the right proportion, right? People do enjoy desserts, people do enjoy sweets, but in the right proportion. Health, focus on exercise, eating right, and making the right choices.
If you like this video, then like, share and subscribe to ET Now.